Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 23rd of June. I hope you had a good week. The market was down a little bit. I was on vacation last week, came back to this little sell-off here. I believe it's just a little bit of profit taking. Let's take a look. First, we have to point out the huge strength in Bitcoin. You know, the federal government seems to try to want to kill that, but it doesn't want to die, and that's great if you're bullish Bitcoin. The SPY again lost a little bit of ground as I've been pointing out to subscribers. You know, we have a very clear pattern right here in the near term of lower highs and lower lows on the 30-minute time frame on the right, and that is occurring below right now a declining 5-day moving average. And in order for this market to be back in control from the buyers with 100% certainty, we need to get back above and hold above the anchored VWAP from the recent peak. That's this red line. So we're right here on the month to date anchored volume weighted average price. It's a level of interest, doesn't mean it has to hold. It's just a place where we look for evidence that the buyers are gaining control, and we don't have that evidence. So it's just a place to look more carefully at the market. If it does find, true support here, then early next week into mid next week, we might see the 5-day moving average and the anchored VWAP off of this peak come and look like this. So, my preferred way for that to occur would be actually a little shakeout, reclaim that 5-day moving average, and then get back above the anchored volume weighted average price from the high, and then to be a buyer over here. I never want to buy the dip. I don't want to buy weakness because it might continue to become weak. Instead, I want to buy strength after the dip, and then buy when the buyers are in control, set my stop underneath the most recent relevant higher low for my time frame, which is found on the 30-minute time frame, and then ride that trend as long as the market tells me. It's possible we see, this 20-day moving average we can see on Thursday was at 428.63. Today 429.73. So, that rose by $1.10. It will rise at a continued, similar clip here the next couple days. So maybe we see that pullback down to the 20-day moving average, and then that's what I've kind of outlined in here. It could be that pullback in towards that level, and as it gets back above the anchor from the peak, which I just drew in incorrectly, then that could be a possible scenario. It's a scenario I'm going to be looking for to potentially set up in the S&P 500 next week. For the NASDAQ, we lost a little bit of ground there as well. Same story. We're below the declining 5-day moving average. Yesterday, we saw it rally right up to that level, and then this morning it gapped lower. So I wasn't a buyer here because it was at those two levels, and I didn't have to wake up with this kind of pain and giving back gains. But the Nasdaq has certainly had a much bigger run than the S&P 500. If it's going to find buyers, perhaps maybe down at that month to date volume weighted average price, that's that blue line. Well, that's going to come into right here with this 20-day moving average as well. By the way, I've got something coming real soon, actually, in regards to TC2000 and the representation of where we started a moving average period. Look for that. It's something I teased on Twitter today. So take a look at twitter.com/Alphatrends. If you're not following me there, you're missing out on so much of the free work that I put out there, in the world, that is. The NASDAQ, though, I mean, if it were to come down in a similar fashion, it might come down like this, get that 5-day moving average flattened out, the anchor off of that peak, and then, we kind of do this, and then the buyers gain control, and we could see continued upside here on this weekly chart, which is still very clearly bullish. So, always keep in mind that bigger picture, which is found on the weekly time frame. And for the S&P 500, don't forget, we, are only, 4 weeks into this break past the range that we've been involved in. The Russell 2000 continues to be a dog. That's not a surprise. It is failing once again here. So we had seen this big push higher and gotten involved in that on the long side. Well, what happened? Then we saw some distribution right in here. It was crossing back and forth above and below the 5-day moving average. It got trapped below the 5-day moving average, and then it was lights out as that support broke and the month-to-date anchored volume weighted average price as well. This market, a lot of people were looking at it saying, hey, it's showing relative strength. Well, again, it's back to relative underperformance and absolute underperformance. I don't really do relative strength studies. I believe that you look at each market based on its own merits. When it's rising, you want to be bullish. It doesn't matter what the other markets are doing. You want to be bullish this market. If you're going to trade the IWM to the long side, you do it when the Russell is going higher. It doesn't matter what it's doing in relation to the NASDAQ or to gold or whatever these ratio charts that people always point out. I've never understood those. Every stock, every trade should be based on its own merits. That's the way I feel. I don't expect everyone to agree with me, and they shouldn't. Everyone should do what makes sense to them. But the bottom line is this breakout has now seemingly failed. It might find buyers at the 200-day moving average in the year-to-date volume weighted average price. That's that thick blue line. Or we could even throw a Fibonacci on here and say, hey, look at that. Maybe it comes down to a 61.8% retracement, down a little bit lower than this. But the bottom line is the momentum is to the downside in the Russell 2000. There's no reason that I can see, at least for my time frame, to be long this market, and there has been no reason over the last week and a half as well once we broke that 5-day moving average that I always am talking about. The semiconductors, kind of the same story here, and this is something I previously sketched out for subscribers. It was holding the month-to-date anchored volume weighted average price, and now it's down to the anchored volume weighted average price from this level, which it previously held as a place where buyers were found. So we've moved from one potential level of support to another potential level of support. We only know true support or resistance in hindsight. So let's go clean that up, go back and put this anchor back on there, and that's where we are now. There's nothing here that says it has to hold. As I point out in my book, Maximum Trading Gains with Anchored VWAP, that's a hint to go buy that book, that I don't like to buy just because we touch this. I want to buy after the dip. Maybe this 5-day moving average comes and does this. Maybe we're in for a deeper pullback. Now we've got a level of interest here that we should be looking at it saying it's at that anchored VWAP. It's at that 20-day moving average, but it does not have to hold. It might end up, gapping up on Monday. People get excited, then it sells off and does this and just continues down. Who knows? Maybe to the, towards the 140 level. This market has had a great rally this year, coming very close to a breakout. And my feeling is, about breakouts is how did they get there? If this market were to break out, I think it would be something that would be sold into and then some profit taking for at least a few weeks. I'm not calling for that right now because we're too far away from an actual breakout to be thinking about that. My time frame is found down here, and again, on this 30-minute time frame on the right, with that 5-day moving average represented by a 65 period, there are 13 30-minute periods per day. So over the course of 5 days, there are 65 periods. That's the true 5-day moving average. Anyways, while we're below that declining 5-day moving average, I have zero interest in buying SMH or any of its components. The biotechs looked like they had, and this is what I was telling subscribers last night. I do this update every single night for subscribers about the broader market, that we had previously seen this resistance hold as support. This resistance had the potential to become support. It was at the 20-day moving average. So let's clean that up again. It was at the 20-day moving average. And I said, listen, maybe you want to buy at the 20-day moving average. I don't, simply because we still have a declining 5-day moving average. To me, it's playing guessing games. Maybe it's a buy, maybe it's going to bounce from the 50-day moving average. I don't know. Nobody knows. But what I want to see instead is that I want to see if it continues down towards that 50-day moving average. I don't care if it does this, and if I'm looking to buy it, that I buy, 3 to 4 days later once the buyers actually have control. I would much prefer to buy at a higher price when I can say the buyers are back in control. It's above the 5-day moving average. It's above the anchored VWAP from the peak. So that purple line that I just drawn in will come down and look like this. When it gets back above there, I would know with 100% certainty the buyers have regained control and the average short seller is losing. So if I buy that unfolding momentum from there, I can buy it with my stop underneath one of these higher lows and hopefully participate in something that could emerge as a longer, sustained uptrend. But when we look at the weekly time frame, which we always have to back up and take a look and say, where actually are we in the overall cycle of this? We're still overall neutral, and we're back to the midpoint of this range that this market has been in for almost 2 years now. This has been really the midpoint of the range. We've only been above it for a handful of weeks and below it for a handful of weeks, and a lot of digestion in here as well, or indigestion, as some people would say. We're trying to find the direction. The good news is the longer term moving averages are flattening out and maybe starting to turn higher. But the bad news is there's no reason on these shorter term time frames to be a buyer. Don't buy the dip, buy strength after the dip. We have no evidence of that yet. Maybe we see some of that evidence next Tuesday, Wednesday, Thursday. I will update subscribers to Alphatrends every single day. You'll have to wait till next Friday if you're not a subscriber. The financial stocks, let's actually look at the KRE, the regional banks, because this is kind of interesting where we are right now. If we look at the daily time frame here on the left, the year-to-date anchored volume weighted average price, that's exactly where we rallied up to since the low was made from the Silicon Valley Bank. So we rallied right up to that and then started to fail. Now look where we are. We're at the anchored volume weighted average price from that low. So here again, on a different instrument, we have a potential level of support. I still think that it's more likely that we probably get a bounce from here and then continue back down and go test these lows in the regional banks. I am not a fan of bank stocks, and especially ones where we have a declining 10, 20, 30, 40-week moving average. That is a downtrend. That is guilty until proven innocent. This could be looked at possibly as a bearish flag. It's kind of an ugly one, and I really don't think it qualifies actually as one, but the bigger bearish picture says we're below declining 10, 20, 30, 40-week moving average. Now is not the time to be a buyer, not for an investor. There's no reason to. If they didn't scare you out, they will most likely wear you out. Similar to what we happened over here. There was plenty of time, to wait to be a buyer and participate in this strength. We could be, right here, and maybe it does that, and you miss a little bit of a rally. But with a declining 200-day moving average, you're typically going to see that rallies fail. Let's take a look at Generac. There's one that, it's got a lot of headlines, but that 200-day moving average is declining. It's more likely to continue to fail. Same with a stock like AFRM. It has these rallies, but with a 200-day moving average that's declining, that's that black line, they're more likely to fail. RNG is another one. Ring keeps coming up to this declining 200-day moving average, and people keep saying, well, it's down too much, and that sort of thing. Same with PayPal. PayPal has been, kind of the poster child. The declining 200-day moving average, it's just a garbage stock. And CRSP, here's one that, declining 200-day moving average. It had this big rally over here, 200-day moving average. It came down. It's testing it. So be aware of those bigger pictures as well when you're near-term trading, that you can't trade in a vacuum based on one time frame. A couple of the stocks that I mentioned this morning on Investors Business Daily, for instance, ICE, Intercontinental Exchange. Here's the anchored volume weighted average price from the all-time high in ICE. You can see that if they didn't scare you out over here, then they wore you out. Now we have this market with a rising 10, 20, 30, 40-week moving average. It's back above the anchored volume weighted average price from the all-time high, which had previously been resistance. So when you look at the daily time frame, that's that resistance. We're pulling back on lighter volume to that level. So is it a buy in here? Not for me, not yet. I want to look at the shorter term time frame and say we're right up against that declining 5-day moving average. We're below the anchored volume weighted average price from the high a week and a half ago. So maybe we do something like this, and then ICE could be a buy over here with a stop under there. That's the type of stock trade that I'm looking for. I'm not buying a dip. I'm not buying it because it's at prior resistance, which has the potential to become support. We'll only know in hindsight, like we always do, with certainty about anything in the market. Thanks for tuning in. Remember, make the trades your own, and only price pays.